Wow, what a difference a day makes. One minute, we're looking at a record high. The next, a complete sea of red. Wall Street just went on an absolute roller coaster, reversing course so fast it left investors everywhere scrambling for answers. So let's break this down and unpack exactly what happened and, more importantly, why.
And really, this one number tells you the whole story. A plunge of nearly 800 points for the Dow. Think about that. Just 24 hours after all the celebration that the government shutdown was over, the market didn't just give back all those gains, it gave back more. This was a huge, sudden shift in market sentiment. And that really sets the stage for our first topic here, understanding this incredible market whiplash. I mean, we are talking about going from a record close for the Dow to a brutal, across-the-board sell-off, all inside a single trading day. And just to put this into perspective for you, this was not some minor dip. This was the single worst day for the markets in over a month. It completely vaporized all the gains from that short-lived relief rally we saw after the shutdown news. That optimism, it just vanished. So when the closing bell finally rang and the dust settled, the damage was pretty clear. The Dow Jones closed down about 1.7%. The broader S&P 500, it fell a similar amount. But as you're about to see, the tech-heavy Nasdaq took the biggest punch of all. And this chart really shows you where the pain was. Look at that. The Nasdaq Composite dropped a staggering 2.3%. That's a huge tell. It's a clear signal that the technology sector was right at the epicenter of this market earthquake. All right, so we know what happened, but the big question, the real question, is why? And the answer? Well, it casts a very long shadow over the entire market. We're talking about the Federal Reserve. So what was it? What could possibly spook investors so badly, so fast? Well, it wasn't just one thing. It was this powerful combination of factors that all, unfortunately, pointed in the exact same scary direction. It was basically a perfect storm of bad news for investors. First, you had more hawkish comments coming from Fed officials. That's code for them signaling they're ready to keep interest rates higher for longer to fight inflation. Then, boom, the producer price index, a key inflation report, came in hotter than anyone expected. That just fueled the fire. So what was the result? Investors looked at all this and immediately started walking back their bets on a rate cut in December. And the market, well, it reacted instantly. Okay, now let's zoom in on the sector that really felt the heat today. Technology. The whole AI boom, which has been the engine for so much of this year's rally, just hit a massive speed bump. The core issue really boils down to one word: valuation. In a world where interest rates look like they might stay high, the promise of massive profits way down the road from these amazing tech and AI stocks, well, it just becomes less valuable today. Why? Because higher rates mean you can get a safer return on your money somewhere else. So investors started asking, are these sky-high prices still worth it? And the biggest names got hammered. We're talking about market leaders like Nvidia and Broadcom, which slid sharply. Tesla also saw a pretty big drop. These are the kinds of companies that have a huge impact on the whole market. And today, they were leading the charge to the downside. Okay, let's pull back for a second and try to look at the bigger picture here. Because what we're really seeing is a fundamental shift in what the market is actually paying attention to. It's like we moved from one big worry right over to another one. The market's focus just pivoted on a dime. That initial relief we felt when the government shutdown ended, that was almost instantly replaced by this renewed sense of fear. The spotlight swung away from Washington politics and right back onto the economic fundamentals: inflation, the health of the economy, and, you guessed it, Fed policy. So is it time to hit the panic button? Well, a lot of analysts are actually saying no. They're calling this a healthy pullback. The idea here is that after such a strong run, the market just needed to take a breather, to kind of digest those big gains. It's not seen as the beginning of a crisis, but maybe a necessary and even normal course correction. So, with all this wild volatility, the big question on everyone's mind is, what do I do now? Well, for our final section, let's take a look at what the pros are actually recommending for investors who are trying to navigate these choppy waters. So what's the game plan? Well, the general consensus seems to be about staying balanced. For some, that might mean trimming a bit from those high-flying growth stocks that have had an incredible run, maybe rotating some of that into more defensive areas. Other analysts are looking at this as a great opportunity to buy high-quality companies at a discount. And through it all, they stress the importance of maintaining those portfolio hedges, things that can protect you just in case things get even crazier. Which leaves us with the million-dollar question hanging over the entire market. Was today's massive drop just a temporary, healthy reset in a bull market that still has legs? Or is this a warning shot, the start of something much bigger on the horizon? For now, one thing is for sure. All eyes are on the Fed.